Hello, crypto world. Welcome to the Chart Historian. My name is Justin, and on this channel, I deep dive into crypto charts, exploring chart structures, fractals, and patterns. So today I've been looking at the Bitcoin chart, and I came across an interesting observation that I believe could potentially show us where that bottom could be to this decline that we are currently in. So let me go back in time to build my case. Okay, so here we are back in 2013/14. We have two corrections that took place here. If you're not familiar with my thesis on Bitcoin corrective structures, you can go back and watch this video. I do a deep dive into it. In brief, I believe that Bitcoin produces one of two structures in a correction. So I label them pattern A and pattern B. Pattern A essentially comes up, makes a peak, comes crashing back down, does a retrace. In that retrace, it does three waves or bounces, 1, 2, 3, to a capitulation point, which in a pattern A would be a V bottom. After that, it moves on into its recovery. A pattern B is similar. Price moves up, comes to a peak, comes crashing down, and from that crash does a retrace, and from there it does three waves down to a capitulation point, 1, 2, 3. At that capitulation point, it does a bounce, at which point it moves on to its recovery. Now, what I noticed is that where pattern B bottomed out here is right at the top of the first wave on the pattern A. So if you put, let's zoom in here a little, if you put a line on this chart, on this peak right here, and compare it to where that capitulation took place, it's right in that same zone. If you put on a Fibonacci retracement level on this, you'll see that where it took place was right around the 0.5 Fibonacci retracement level. So that wave 1 on that retrace, basically just two little wicks made it above that 0.5 Fibonacci retracement level. Let's go to today's chart and see if we can find some similarities. So here we are in today's chart. Here is two corrections that we see. This is a pattern A and this is a pattern B. The reason why I know this is likely a pattern B is because they alternate. So this is an interesting pattern A. So essentially, let me zoom in so we can get a better look at it. So price moves up, comes to a peak, comes crashing down, and then it does a retrace. From that retrace, it does three bounces, 1, 2, 3, to a capitulation point, which is a V bottom, after which it goes into its recovery. Now, this V bottom has been stretched out. This whole fractal has been stretched out by time, so it looks like a very interesting V bottom. However, if you this structure here at the bottom is structurally the same as what is present at more traditional looking V bottom. If you took this and brought this back together, it would look like a V bottom. This also has a split peak right here. Actually, if you look at it closely, they all kind of have a split or two parts to them right here. One right here. This one has two little parts. This one was just extreme. It was like cleaved in half almost, but I consider it one peak. Now let's throw on a Fibonacci retracement level and see how that compares to what we saw previously. Well, let me zoom in. If you see where the first wave took place, let me delete this arrow, put a new one. So you see here's that first wave, again, right near the 0.5 Fibonacci retracement level. And just like the other one, it has just a couple little almost wicks just poking up, just right above it. So we see this plane appears to potentially have played out again. Will we now also see this bottom out right around this level? So let's put a line on here and see where this is. Let's see. Okay, so roughly right around there. So that would be in the $11,000 range. So $11,726.07. could be off on my placement of that line. But if this thesis is correct, Bitcoin, we would see Bitcoin drop further to this level right here. And from this level, it would do a bounce and move on into its recovery. So what kind of a percentage drop would that be? And is that kind of a normal, would that be normal? Let's see, roughly that would be an 83% decline. So for pattern Bs, there has been one, I think 72-ish, one was 93% decline, and there was another one that was an 87%. So it is within that realm of historical normalcy. I guess we will see. This is a theory. Now, there is a weakness to this theory, and that is that what I'm proposing has only happened once. Now, there also is a strength to this theory, and that is what I'm proposing has already happened once. So it could be both a strength and a weakness. Well, I hope you found this video helpful. If you did, it'd be much appreciated if you hit that thumbs up button. You can also hit the subscribe button, and you'll be notified of when I put out new content. I put out new videos on a regular basis. You can also follow me at Chart Historian on Twitter. And one other important thing, I am not a financial advisor, so nothing I present here should be construed as financial advice or investment advice. I am so glad you caught this video. I hope you catch my next one. Have a great day, and bye for now.